Which regulatory compliance frameworks apply to fintech? Imagine trying to navigate a maze with many different signs pointing in various directions. That's what fintech companies face when it comes to compliance. They need to follow a mix of rules designed to keep financial transactions safe, fair, and transparent. Let's explore what frameworks are involved and how they shape fintech operations. First, fintechs must follow anti-money laundering and know your customer regulations. These rules requiring verifying customer identities, monitoring transactions for suspicious activity, keeping detailed records, and reporting any unusual transactions. This helps prevent illegal activities like money laundering and terrorism financing. In the United States, several federal agencies oversee fintech compliance. The Consumer Financial Protection Bureau looks after consumer financial products and ensures fair treatment. The Securities and Exchange Commission regulates securities and investment-related services. The Federal Trade Commission enforces laws against deceptive practices. The Office of the Comptroller of the Currency supervises national banks and federal savings associations. States also have their own rules, like New York's BitLicense, which applies to virtual currency businesses and requires licensing, cybersecurity plans, and regular reporting. Cybersecurity is a major concern for fintechs because they handle sensitive customer data and financial information. The General Data Protection Regulation, or GDPR, is a European Union law that emphasizes transparency, user consent, and data minimization. Payment Card Industry Data Security Standards, or PCI-DSS, set strict rules for handling payment card information, including secure storage, encryption, and regular vulnerability scans. The Digital Operational Resilience Act in the European Union requires firms to manage IT risks, respond to incidents quickly, and oversee third-party providers. Sector-specific rules also come into play depending on the services offered. For example, broker-dealers must register with the Securities and Exchange Commission and follow Financial Industry Regulatory Authority rules, including trade reporting and customer disclosures. Payment service providers in Europe must comply with the Payment Services Directive II, which mandates strong customer authentication and licensing. From a cybersecurity law perspective, the New York Department of Financial Services cybersecurity regulation is very strict. It requires financial institutions, including fintechs, to conduct risk assessments, develop incident response plans, and continuously monitor their systems to protect customer data and financial infrastructure. Technologically, compliance involves using secure payment processing, encryption, firewalls, vulnerability assessments, and automated testing to prevent breaches. Many fintechs also use blockchain technology for compliance. Smart contracts can automate identity verification and transaction limits, while tamper-proof records and encrypted data access improve transparency and reporting. Fintech companies manage compliance by creating dedicated teams, integrating regulations into product design, conducting regular audits, and using regulatory technology solutions for automation. Because regulations are constantly changing, especially in the United States, staying informed and working closely with regulators and banks is essential. In short, the main compliance frameworks for fintech include anti-money laundering and know your customer rules, consumer protection laws, securities regulations, cybersecurity standards, and sector-specific rules. These frameworks work together to ensure fintechs operate securely, protect customer data, and support the stability of the financial system.